Hi there folks, welcome to another clip here on my YouTube channel. Well, it took me a while for that kind of a clip, almost 1 month break I guess. Well, let's have a talk about the US dollar versus the Japanese yen today and about the so-called Mrs. Watanabe trade and what it has in common with that typical saying Mrs. Watanabe wins a lot because she's playing the carry trade. We'll be having a look at the chart technical part, at the chart technical stuff like Fibonacci's, and later on just talk about some fundamentals. But before we get started, I would like to invite you to leave some thumbs up for that clip, and as well, in addition, to be a member of this channel. It is quite easy, just press that red button here at the YouTube platform. Quite easy, it's free. And feel free to join, very much appreciated if you do so. Well, let's have a look at the chart technical part right now. At the US dollar versus the Japanese yen, that's a weekly chart picture. So as you can see, we see the 125.85.3 as a 100% marker and the 98.97.1 as a 0% marker. The usual Fibonacci retracement analyzes the combination, so the platform is giving you a couple of retracement levels and projection levels to the upside here as well. As you can see, this is a platform for guidance, and you see there is a relative strength index added below here, and these two lines, the blue one is the exponential moving average 100 and the red one is the exponential moving average 200. So let's have a look at the current picture where we are heading to, or possibly heading to. So we see there is a 161.8 Fibonacci projection level at 142.46.6. So that's the one probably be taken to. And right now we are in the test of the 136.12.12. That's the 138.2 Fibonacci projection. So that's where we are scratching around here. And these two arrows, so the arrow to the upside is a possible target for the bulls, and the arrow to the downside here, the red one, is the target for the bears. The possibly target for the bears is at the 125.85.3 100% marker, so so-called setback to that one here. Okay, so you see there could be some kind of relief in the coming days or weeks, just because of the reason we are way overbought here. So the relative strength index right here on the weekly time frame shows you that there is 82.35 relative strength index level, so way overbought, and you see that kind of the same happening here. So the last time we went up there here around June 2015 was at the 125.85.3. That was the area where that kind of a relative strength index area was way overbought as well. It came back way below in direction, as we can see that run right here in the chart. So now we are possibly heading to that, let's say, setback scenario in the coming weeks. It won't be that strong. Maybe it's not strong enough to get that stuff back here in the red in the red area, but it could possibly do so in direction of that 127.20 Fibonacci projection level of 133. Okay, so just saying, it's just because of the reason that there is possibly some pricing in of a setback in US rates in the coming and foreseeable future. So kind of markets like even the currency markets are pricing in a couple of things into the future, of course, and as well they are already priced in a lot of interest rates to the upside, and they're already priced in the QT, so the quantitative tightening, and so maybe they did not price in the possible rates going back from 3.8 to 3.4 in the foreseeable future. So talking about the year 2023, second half of the year in direction to 2024. So of course it sounds very late, and it's way back than 12 and more months to go down the road, of course. But as I said before, markets tend to price in a couple of events before the events happen. All right, let's have a look at the fundamental part right now. All right, before we speak about interest rates differentials between the US dollar and the Japanese yen, let's simply explain what is Mrs. Watanabe. Why is it called Mrs. Watanabe? Well, Mrs. Watanabe stands for the average Japanese housewife. So Watanabe is a quite common name in Japan. And she stands for the Japanese housewife being responsible for the family's savings. And she always likes to make most out of it. So that's the reason she moves the money from the family into other asset classes, into other currencies as well. So that's why, just because of the reason, the Japanese yen has a negative interest rate yield of 0.10%, and Mr. Kuroda from the Bank of Japan already said a couple of times this might stay for a longer time and for the foreseeable future, so there is no change. So Mrs. Watanabe is always busy to do something, and that's why she keeps on moving money from Japan, for example, into the US. So that means she moves money from a low yield currency into a higher yield currency. So that's so-called the carry trade. She carries the trade from the lower yield currency to the higher yield currency. And the longer that takes, the more nights and more weeks and more months are adding to that kind of a trade, the more money, the more yield she gets. Let's speak about the spot trading US dollar versus the yen. So you will be able to earn the swap overnight. Every night and night after night, you'll be getting some kind of yield. If you are long, in case you are long US dollar versus the Japanese yen. So that means you are long the dollar and short the Japanese yen, just to speak about that from a beginner's perspective. So what does it mean in the longer run? So right now we have that typical scheme. We see interest rates are rising in the US, and the markets tend to price in that stuff quite heavy. And it looks like all of this kind of a move is already priced in. Let's say most of it's priced in. And even that QT, so that quantitative tightening from the Federal Reserve, which reduces the Fed balance around $1 trillion in the next month to come. Also, for example, 12 month means something like 997.5 billion US dollars less on the Fed balance. Everything like that is already mostly priced into that kind of a currency pair, US dollar versus the yen. So what does it mean into the next month and into the next year, 2023? Markets tend to price in something like 3 to 6 months ahead. So we already see that from the FOMC, from the Fed Watch tool, for example. So probabilities, they are sinking in direction second half of the year 2023, in direction 2024, just because of the reason that there is, let's say, a break or a pause, or that's the end of that kind of a hiking cycle. So the Federal Reserve could reduce the pace again and reduce the rates again from the second half of the year 2023 in direction 2024. So that means the same stuff you can read in the Fed projections, for example. Check the Fed projections. You will see that the average rate, so the federal funds rate in 2023, in 2024 is lower than in 2023. And from the longer run, they already spoke about average rate of 2.5% in the longer run. So that means that interest rates are going back down again after that hiking cycle. And if you just combine that with a typical carry trade scenario, from some time on, all these big guys and girls and even Miss Watanabe will have to find some kind of a point, some kind of a time where they slightly take out and reduce that carry trade and close that carry trade. So that is the thing about the carry trade and about Mrs. Watanabe and US dollar versus the yen. In the longer run, that could mean that we don't see that levels of 140, 145 and so on for a longer time. It could mean that we could go back to levels like 125 or even underneath that in the next 6 to 12 months. So as everything, as I tell you all the time, this is nothing like hammered in stone. Things at the markets are changing, of course, fluently, from one day to another, from 1 week to another, of course. It's something like a heads up, think about it, work on that kind of a, let's say, overbought territory right now. If this is something for you, start with maybe a short time trade in direction of a US dollar Japanese yen short, or try to take that kind of a time like a new chance when the currency pair of the US dollar versus yen is going back a little bit to step in again for next leg to the upside, possibly the last leg I told you about in the chart at 161.80 level in direction of the 140s up there. All right, it's Sunday today, the video I'm recording here. I wish you a perfect start into a new week. Tons of pips, good trades, good setups, and most of luck, health, and all you need. Thank you very much for your time, for your attention, and see you next time. Bye-bye.